Okay, so it's day 24 of my daily dollar cost averaging for Bitcoin. And just looking at it, so it's up 2.27%. So again, we'll just get this over with. Go to DAI, 2 Bitcoin, $333. Convert now. Okay, bang, done. All right, so again, we'll just check out the portfolio here. Yeah, so I'm up to 8,000 Canadian. So I have 13.65% Bitcoin. Um, and I have some Chainlink and some Algorand. I think I might go over to Binance so I can buy some, whatchamacallit, the Cardano, because you can't get it on Coinbase. Again, I don't know why Coinbase is dragging their feet with Cardano. For whatever reason, they seem to have some sort of a hate for Cardano. I don't really know why that is. But anyways, that's just the way it is. I might go there to get some Cardano in the future. I don't know exactly when, but I might do that. But anyways, what I thought was interesting, I was just watching again, the Max Kaiser, who's like a really strong voice in the world of Bitcoin. Um, he's saying, is Bitcoin going to peak this year? Right. And again, we'll just listen to what he has to say. But what he's saying is very compelling. This is why I keep saying daily dollar cost average, because I have no idea. Because it's so like there's this huge dichotomy. There's people saying, it's going to zero, and somebody will say, oh, this guy's got a PhD or he's whatever. So it's not like some stooge, like it's somebody who's highly educated, so on and so forth. Then you get another person who's highly educated saying the exact opposite. Like there's this dichotomy of points of view. It's not like some people say, "Oh yeah, it's pretty good," and it should go up, a fair bit, yada yada yada. Like no one's really middle of the road. Like it's either it's going to nothing or it's going up to millions, right? But again, we'll just listen to this video, and again, like it's very compelling. And but like I said, then you got the polar opposite, where somebody's saying the exact opposite. It's all going to zero. It's a scam. Yada yada yada. But anyways, I'll just run this clip, and then I'll discuss it in a second. Okay.
That is turning out to be true. You see it in the numbers. You see people selling gold ETFs, and you see them buying Bitcoin ETFs like GBTC. And now the biggest fund manager in the world, which is BlackRock, they manage $7 trillion. BlackRock CIO says Bitcoin will take the place of gold to a large extent. And this is BlackRock's CIO of fixed income. His name is Rick Reeder. He said Bitcoin is here to stay. While conceding that he is not a Bitcoin bull, Reeder said the flagship currency will, quote, take the place of gold to a large extent because it is so more functional than passing a bar of gold around.
We've heard the argument that Bitcoin is gold 2.0, that it's superior to gold, but that has come from the internet, from social media, from heterodox thinkers like ourselves. It's not come from a $7 trillion managed fund like BlackRock, and we're hearing it from other folks like Paul Tudor Jones, Stan Druckenmiller, and all. There's $100 trillion out there looking for a home as part of the managed money environment. They are 7% of that $100 trillion. If only 1 or 2 or 3% of that money goes into Bitcoin, that means the price triples overnight. Well, remember the old peak oil or peak gold arguments that we are running out of oil or we're running out of gold.
What would your life be like if you were a rapid transformational therapist?
That, of course, is not true, but in the case of Bitcoin, because it is absolutely scarce and because the demand is approaching infinity, we are potentially hitting peak Bitcoin, where it will become increasingly impossible for the average mom and pop to acquire Bitcoin, because all the 900 coins per day that are generated through mining will be sucked up by the institutions and will never hit the market. The corrections in Bitcoin have been successfully getting less and less and less. I mean, I've went through 3 80 to 90% corrections, in Bitcoin since 2011. So we just experienced a 20% correction. And so now that correction's over, and now we start going higher. And so it'll start to behave more like an asset class where you might see 10 to 20% corrections. The 30, 40, 50% corrections, I think, we're past that because the size of the market's gotten to be a lot bigger, and the amount of money on the sidelines waiting to get in is enormous. The biggest money funds in the world, BlackRock, Stan Druckenmiller, Paul Tudor Jones, Mass Mutual Insurance Company, they're all sitting on the bid, hoping to accumulate as much Bitcoin as possible.
Okay, so what he just said, like, again, and this is why, like, I do what I do, because if you just go by what this guy's saying, and I always say the same thing. I'm not saying he's wrong. It's extremely compelling, but I can go find you videos that say the polar opposite of what he's saying. But what he's saying does totally make sense. Like, if there's only 900 a day coming out onto the market, and institutions are sucking them up at, what do you say, at a rate of 3,000 a day? So right off the bat, there's not enough supply for demand. Okay. But that's taken for granted that they like it, that they want to acquire it, continue to acquire it at that rate, so on and so forth. But what I think a more like long-term problem is if it does get to that point where nobody has it, then people will just lose interest in it. You know what I mean? It's like saying, for instance, if you have like classic Ferraris or something like that, I can't remember which one it was. I think it was like a GTO or something like that. There's one that's like $30 million. Like, it's from the 60s and everybody wanted it. I think Nick Mason from Pink Floyd had one, and there's like just a handful of them ever made, and so on and so forth. But I'm saying, like, if, say, for instance, that elite sort of club just goes on to something else, like they just don't like that anymore, who are you going to sell them to? Like, you know what I mean? Like, if the entire general public has been disenchanted with Bitcoin simply because they cannot acquire it anymore, it's one of those things you hear about, but it's so far beyond your grasp that you never acquire it. If they ever do, like, if these, like, BlackRock and this Tudor Jones guy and all these, like, hedge fund managers, so on and so forth, if they go, okay, we need $1 billion for whatever reason, who are you going to sell it to? Like, you got this little elite club that, that nobody is allowed in. Well, guess what? Now you can't dump it because it's not worth anything to anybody. So I think that, to me, is the biggest problem with Bitcoin, is that it could be a victim of its own success, in the sense that if it becomes so elite, the demand, like, it's because its demand is finite. I mean, the supply is finite. The demand can, outstrip it. And like I said, if something's only worth what somebody else is willing to pay. And again, if it gets to the point where, like, millions of people are cut off from it, it's going to be this, like, poker chip amongst billionaires. And like I said, if they decide to move on to something else, who are they going to sell it to? It's kind of I think they're in a kind of a unique situation, because something like oil, everybody, within reason, I'm saying, like, everybody who owns a car needs to buy gas. So the reason why it goes up is because, whether you like to or not, you're forced to buy it, right? And the same thing with, certain food commodities, like, say, orange juice, whatever, so on and so forth. You go on all day, there's a demand for it, or a legitimate demand for it, because everybody wants it, right? But if you if you don't, if you kind of, railroad people out from buying it, and the day comes where you need to dump a significant amount, I just don't see it maintaining its price. And he's saying it's getting there already, where he just said like a mom and pop can't buy it. So I think people just abandon it. Like, you know what I mean? It's hard to say. Like, I don't want, like, I'm obviously buying it. So I think it's a good investment, but I'm just saying from a very long-term point of view, how much legs can it possibly have if it's continuously being, in the realm of the mega rich, right? But the other thing that I think Bitcoin does have going for it is that you can buy fractional pieces. Like today, I just bought $333 worth. Like, I don't have to buy a whole Bitcoin. You can buy fractions of it. And that's another thing. I was reading about that even in the stock market, they're looking to do that where you can buy fractional shares of stock. And I'm sure that's because of cryptocurrency, because people can't buy a whole, if a share is $150 a share, they can't buy it. So someone's coming up with a product where you can buy fractional shares, just like Bitcoin. And I think that's because, the cryptocurrency market has been taking business away from the stock market. But that's one good thing. So like, I've seen so many models about this that they're saying that if you have just 0.29% of a Bitcoin, you'll be one of the richest people in the world. Just from a mathematical point of view, not everybody on the planet can own 0.29% of a Bitcoin. There's just not enough of it. It's mathematically impossible. And I think that equates to the top 10% of people of the world. So if you have 0.29, and don't forget, there's obviously whales who have thousands of them. So if you have 0.29% of one Bitcoin, you will be amongst the richest people in the world. And but like I said, if that's predicated on the notion that people still have access to it. If the access dries up, how much demand? Like are people still going to be willing to buy it, right? So, but anyways, that's just kind of what I'm looking at right now. And I don't know, it's very, again, that's why I do daily dollar cost averaging, because you'll hear a compelling argument like this, and then the next day you'll hear, oh yeah, like soon as like here's one right here. Okay, here's a complete opposite argument, right? Okay,
reach all your gear in one.
Okay, I'm gonna just kill this ad. Okay, this guy.
Forum and the IMF's plan to replace Bitcoin, gold, the dollar with the digital or crypto SDR.
Okay, so right off the bat, this, and again, I'm not even saying this guy's wrong. Like I've watched this George Gammon guy before, and I subscribe to him, and he's a very smart guy, and I'm not criticizing him at all. But look what it says: IMF plan to replace Bitcoin, gold, dollar with digital SDR. Okay, so special drawing rights. So you got Max Kaiser saying that, sky's the limit. It's going to triple. It's going to do this. It's going to do that. Yada, yada, yada. This guy here saying gold, never mind just Bitcoin, gold and the dollar along with Bitcoin is going to be nothing. The IMF is going to get rid of all that with the special drawing rights. I have no idea what that is. And again, like when people talk about things like, oh, shadow government, the deep state, so on and so forth. And I've spoken about this before, but this is a prime example. The IMF, okay? That is the deep state. And if you say, oh, that's just a conspiracy theory. No, it's not. Look at the definition of the deep state. All a deep state or a shadow government. Like, again, go back to the books of Edward Bernays in Propaganda, his famous book, Propaganda. He talks about that almost 100 years ago, because I never heard of that term before till like recently. But all the shadow government is a non-elected body that influences society, that can do things to society. You have to ask yourself, the International Monetary Fund, did you ever elect them? That is a non-elected body that makes decisions for society. Nobody, like, they might elect themselves internally, but there is no election, once every 4 years or wherever, where you vote for the IMF. That is an appointed. They are all appointed by some sort of governing body, but regular people have no say on how the IMF is run, who's in power, nothing. That is a non-democratic, appointed only body. So if you say, oh yeah, the deep state, that's all a myth, that's all conspiracy theory. No, it's not. They have just somehow appropriated power of the world. And so like I said, they're going to plan to replace all this stuff. Did you vote for that? I didn't. Maybe you know something that I don't know, but this whole thing, like, again, if you're going to listen to this guy, and again, I'm not saying this guy's wrong, and I'm not saying Max Kaiser's wrong. And I'm not going to say one guy's a shill or one guy's this. I don't know. I don't know what's going on. And that's why I do what I do, because I don't know what's going on. Like, nobody does. Like, this guy's given, his take on it. And like I said before, this guy's very compelling. I'm not saying he's making it up. I'm not saying he's wrong or whatever. But this is the whole thing. You just finished Max Kaiser saying that peak Bitcoin, it's just going to keep going up. There's nowhere for it to go but up. And it's extremely compelling. All these huge hedge fund managers are buying it, all this, And as soon as this guy is done talking, you watch this guy. Oh, you think Bitcoin's going to be done? So is gold, and so is the dollar with their own digital SDR. Right? So buy an entity that nobody elected, all decided by them. Right? But anyway, so let's just hear what this guy has to say.
I'm going to explain this to you in 3 simple, fast steps. Step number 1, the SDR revealed. How do they actually work, and what are they? It all starts in 1944 with Bretton Woods. Keynes had the idea to create a global currency called Bank Corps. He kind of saw Triffin's dilemma in advance, that the United States would have to run these huge trade deficits in order to supply the world with the dollars that those emerging economies needed to grow at full capacity. So he thought it would be a better idea to have a global reserve currency that wasn't attached to any one specific country. Then in 1969, the Bretton Woods system started to deteriorate. The United States just didn't have enough gold, and they were creating way too many currency units domestically. So those foreigners exchanged their dollars for gold, but this led to a big, big problem for the United States. We all know what happened in 1971. But a couple years prior, the SDR was created to combat this problem. So what is an SDR? Technically, if you go to the IMF's website, what they call it is a reserve asset. So it's a basket of several other fiat currencies. At least that's how it gets its value. Currently, those fiat currencies include the dollar, yen, pound, euro, and most recently, they included the renminbi, or the Chinese currency, yuan. Now, there are no SDR bills or coins, so SDRs can't be used to buy goods or services. They can only be exchanged for fiat currency. It's just an asset that goes back and forth from one central bank to the other, and only member nations that are signed up with the IMF. Of course, the majority of the countries in the world are included in their member nations. Only used by central banks, like we said. But what most people don't realize is the central banks can earn or they have to pay interest on the SDRs they hold. More on that in a moment. And of course, the entire system is controlled by the IMF. So we like to think that the central banks are central to their domestic currency supply. That may be true to a certain degree, but if you really read between the lines, it seems like the IMF or maybe the World Economic Forum are really pulling the strings. To understand this better, let's go right to the internet.
The SDR was created by the IMF in 1969. Currently, the amount of SDRs stands at just over 204 billion. Its value is based on a basket of 4 key international currencies: the US dollar, Japanese yen, British pound, and the euro. There are no notes or coins denominated in SDRs, but the SDR does play a role as an interest-bearing international reserve asset. The IMF allocates SDRs to its members in proportion to their standing in the organization, which is largely based on their share of the global economy. The allocation of SDRs boosts member countries' official reserves. While SDRs cannot be used to purchase goods and services directly, countries can exchange them amongst themselves. Once the SDRs have been added to a member country's official reserves, the country can exchange its SDRs for hard currencies such as the US dollar, euro, yen, or pound through voluntary trading arrangements with other IMF member countries. If a member purchases SDRs and its holdings rise above its allocation, it earns interest on the excess. Conversely, if it sells SDRs and holds fewer SDRs than allocated, it pays interest on the shortfall.
So the concept of an SDR, pretty straightforward. But the way a central bank earns or has to pay interest, a little more confusing. Let's walk through that. The IMF is in the middle or in control of the entire system. We have 4 countries, XYZ, 1, 2, 3, ABC, and 3, 2, 1. I couldn't think of anything else. I just had to reverse those darn numbers. So XYZ is low on a specific fiat currency in their reserve account. They have a lot of SDRs. So they go to country ABC and say, listen, we will trade you some SDRs for your fiat currency. The transaction goes through the IMF, so the ABC countries, or their central bank, sends the money through the IMF deposits it into the reserve account at XYZ country's central bank. So now XYZ country has fewer SDRs. Those SDRs were transferred via the IMF to ABC for the currency, the fiat currency ABC sent to XYZ. But as a result, now they have fewer SDRs, so they're going to have to pay interest to the IMF, which goes to country ABC. So let's restate this just one more time. XYZ trades SDRs for fiat currency with ABC. Whomever has less or fewer SDRs than they originally started with has to pay interest to the IMF, and whoever has more SDRs than they started with receives the interest from the IMF. But the main takeaway is the IMF is right in the middle of all the transactions, and they control the SDR and the SDR network.
Okay, so there you go. Does that sound like does that sound like free market to you? I don't know. To me, it doesn't. Like that sounds like communism. I don't know. Where, they get like these international bodies, like everybody, oh, it's a conspiracy theory, blah, 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 blah. They just let these people do what they want. Like who gave them the authority to do all this? The IMF, the World Bank, the United Nations, all this stuff. They just do what they want, right? But anyways, I'm not going to get into that. But to me, it just sounds like a planned economy. And like I said, like if you go out and you listen to this guy, you listen to if you listen to Max Kaiser, he's saying, "Oh, sky's the limit." Bitcoin, it's going to keep going up. Like you're not. He's even saying you're not even going to see any of those huge volatility swings anymore. He goes, it's going to be around 20%. Like those 90% drops, you're not going to see them anymore. It's all going to be like 10, 20%. That's it. We'll see about that. And like I said, I like volatility. I actually want to see it. But this whole IMF thing, the World Economic Forum, the IMF, the World Bank, so on and so forth. This does not sound very Bitcoin friendly. Again, so I'm not trying to scare anybody, but I'm just saying this is what's out there, right? But anyways, we just have to look at it and do the best we can. But anyways, that's basically it for today. I'll see you tomorrow. Take care.